Hi there, this is Sean Brodrick for UncommonWisdomDaily.com. Let's look at some recent developments in gold, and then I'll have an opportunity for you. On the bearish side, both gold and gold mining stocks got shellacked last week. Gold dropped 1.5%, and gold miners, as measured by the Market Vectors Gold Miners ETF, or GDX, dropped 9%. Ouch! That's more than double the 4% drop that we saw in the S&P 500. But there's also bullish news. India's gold sales during the festival season just ended actually rose 5.7% from a year earlier to 56 tons, despite near-record prices, according to the World Gold Council. Also, China's Golden Week holiday saw jewelry demand stronger than in previous years, and finally, consumer demand is roaring back in Dubai as well. So, why did gold go lower? The US dollar finally caught a bounce last week, and as you know, since gold and the dollar sit on opposite ends of the seesaw of pain, as one goes up, the other usually goes down. Anyway, the pullback in gold and gold miners has set up an opportunity. Look at this chart of the GDX, which holds a basket of miners. You can see that last week's sell-off brought the GDX back into support. There's no line in the sand, so I've drawn support as basically a zone. When the GDX gets close to the zone, like it did in September and like it did just last week, it's a buying opportunity, usually. On the bottom of the chart, I've also shown the ratio of the GDX to the price of gold. Now, the price of gold is tracked by the GLD, but it's still pretty close. By this measure, the GDX is cheap now, and when that ratio has turned up in the past, this chart shows us that the GDX can bolt higher. So I think we're seeing real opportunity in both gold and gold miners. Before I leave you, I want to mention that I'll be hosting a webinar on Friday. This is not part of the Weiss Group, but it is instead another organization that I belong to, the Secret Order of Jurgen. Jurgen covers the gamut of commodity markets, from ETFs to stocks that are focused on commodities to futures and futures options. Due to unprecedented demand, our webinar was overbooked on the first day that it was announced. Therefore, we've opened up the registration so more people can sign up. However, be aware that while more people can register, only the first 1,000 people who log in at noon on Friday will actually be able to attend the event. You can register for this event at a web link that you can find on my blog. And if you miss it, don't worry. You'll be able to watch rebroadcasts of this Trojan event later on. This is Sean Brodrick for UncommonWisdomDaily.com. Thanks for watching.